Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions. Don't forget to sign up for our free newsletter at https://w.morningdownload.com. Subscribe. Let's dive right in. In today's episode, we'll cover the performance of small stocks and big names, a Swiss bank's admission of helping hide money, Moody's downgrade of China's credit outlook, Alaska Air's acquisition of Hawaiian Airlines, the market's momentum and shift to cryptocurrencies and gold, the skepticism surrounding Bitcoin reaching $500,000, the estate tax on property transfer at death, and the importance of making money and minimizing losses in personal finance.
Before we dive into today's topics, let me drop a fun fact on you. Hold on to your hats because Occidental Petroleum Corp rocked the charts in 2022, growing a mind-boggling 119.1% over the previous year. Now that's what I call some serious stock magic. Today, let's dive into the latest economy and news updates. Brace yourselves because we've got some interesting stuff to cover. First up, Swiss Bank Pictet recently spilled the beans. They admitted to assisting U.S. taxpayers in hiding a whopping $5.6 billion from the IRS. Yikes! However, they've entered into a deferred prosecution agreement with the Justice Department. If they play by the rules outlined in the agreement, the prosecution will be postponed for 3 years. Then, the charge of criminal conspiracy to defraud the IRS will be dismissed. Talk about a legal twist. Now let's talk about China. Moody's, the ratings agency, has downgraded China's government credit ratings. They changed its outlook from stable to negative. What's behind this decision? Well, Moody's believes that Beijing's support and potential bailouts for struggling local governments and state-owned enterprises will weaken China's fiscal, economic, and institutional strength. However, they did retain China's A1 long-term rating on its sovereign bonds. It's a mixed bag for sure. Moving stateside, the U.S. Treasury yields experienced a decline on Tuesday. Why? Because investors are keeping a keen eye on the latest jobs data. They hope the numbers will provide some insights into the state of the economy, so keep an ear out for those juicy job stats. In global news, there's some business news to cover. Alaska Air is making moves as they plan to acquire Hawaiian Airlines for a whopping $9 billion. Looks like the airline industry is on the move. Meanwhile, in China, factory activity has contracted for the second consecutive month in November. It's an interesting situation since China has implemented stimulus measures. Let's see how that unfolds. Last but not least, some good news for the workers of MGM Grand Detroit. They finally reached an agreement after a long 47-day strike. The deal has been ratified, putting an end to the labor dispute. Congrats to the casino workers on finding a resolution. So, it seems like stocks had a bit of a rough start to the week. Investors are starting to question if the market might be getting a little ahead of itself, especially after 5 consecutive weeks of winning. All the major indexes took a hit, but the tech sector seemed to suffer the most. Technology shares really struggled during the session. Nvidia in particular slid more than 2%, and both Microsoft and Meta each lost more than 1%. Not great news for them. In fact, Nvidia has lost around 6% in just 1 week. Ouch. Interestingly, it looks like money is flowing away from stocks and towards cryptocurrencies and gold. Bitcoin, for example, passed the $41,000 mark, hitting its highest point in 18 months. And gold? Well, it reached its highest nominal intraday level ever. It's safe to say that both of these are gaining some serious attention. And guess what? The jump in interest in cryptocurrencies and gold isn't only benefiting Bitcoin and gold themselves. Stocks related to cryptocurrencies and digital currencies are also seeing a boost. Coinbase, for instance, gained 6%, and Marathon Digital saw an 8% rise. So it seems like investors are shifting their focus and getting a little cautious with stocks, while cryptocurrencies and gold are having quite the moment. It'll be interesting to see how this all plays out in the coming weeks. Bloomberg is expecting Bitcoin to reach a whopping $500,000. Can you believe that? Currently, Bitcoin is trading at a high point for the year, surpassing $41,000. And now, experts are jumping on the bandwagon, predicting that this bull run is far from over. This year alone, Bitcoin has already seen gains of over 150%. Incredible, right? Now everyone's got their eyes on the US, eagerly awaiting the approval of a Bitcoin ETF. If that happens, it could potentially attract even more investments into the crypto space. Exciting stuff. But before we get too carried away, let's take a step back and remember that this isn't the first time Bitcoin has experienced all of this hype. Just last year in 2021, it hit an all-time high of nearly $69,000. But sadly, it couldn't hold on to that price. And the currency suffered a decline of 64% in 2022, following a 60% gain the year before. So, while we're all optimistic about the potential approval of a Bitcoin ETF and the anticipation of interest rate cuts, there are still some skeptics among us. Michael O'Rourke, the chief market strategist at Jones Trading, called Bitcoin speculative, suggesting that a lot of investors might stay away from it. Well, only time will tell if their predictions hold true, or if we're in for another roller coaster ride in the world of crypto. Let's dive into personal finance and take a look at an interesting topic, the estate tax. Essentially, estate tax is a tax that comes into play when you pass away and want to transfer your property to your beneficiaries. It involves accounting for everything you own or have an interest in at the time of your death. Now, you might think that this tax affects a lot of people, but in reality, it's not that common. It primarily targets the wealthy individuals out there. In fact, it's only applicable in specific states like Connecticut, Hawaii, District of Columbia, Illinois, Massachusetts, Maryland, Maine, New York, Minnesota, Oregon, Rhode Island, Washington State, and Vermont. It's important to note that even non-residents can owe estate taxes. If you live in a state that doesn't have an estate or inheritance tax, but own property in a state that does, you might still be responsible for paying these taxes. For those whose estates exceed the 2023 limit of $12, $92 million, they could be subject to a federal estate tax rate of 40%. However, there's good news. By demonstrating eligible deductions, it's possible to reduce this rate and potentially save some money. So, if you find yourself in a situation where the estate tax may come into play, make sure to understand the specific rules and regulations in your state. And who knows, you might even find some deductions that can help you minimize the impact of this tax. Have you ever wondered what really matters when it comes to personal finance? Well, let me share a quote that might just shed some light on this topic. According to George Soros, a legendary investor, it's not about being right or wrong. Instead, what really counts is how much money you make when you're right and how much you lose when you're wrong. Think about it for a moment. In personal finance, it's not just about making the right decisions. It's about making the most out of those decisions. Sure, we all want to be right with our financial choices, but what truly matters is the impact those choices have on our bottom line. Making money when we're right is crucial, as it helps us grow our wealth and achieve our financial goals. But the other side of the coin is just as important. We need to minimize our losses when we're wrong. It's inevitable that we'll make some financial missteps along the way, but what matters is how we handle those setbacks. By learning from our mistakes and taking steps to limit the damage, we can avoid taking major hits to our finances. So remember, it's not simply about being right or wrong in personal finance. It's about maximizing the wins and minimizing the losses. By focusing on these aspects, we can navigate the financial landscape with confidence and work towards a brighter financial future.
In today's podcast, we covered a range of topics, including the performance of small stocks versus big names, a Swiss bank's admission of helping hide billions from the IRS, the market's momentum and the shift to cryptocurrencies and gold, the expectations for Bitcoin, the estate tax, and the importance of making money and minimizing losses in personal finance. Thanks for tuning in to the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at morningdownload.com/subscribe.